Today we'll show you a profitable swing trading strategy based on break-off structure. I will explain a proven price model that you can use for swing trading any forex pair, and of course I will share a real example. Our ideal break-off structure based swing trading setup will be based on 4 important elements. First, the market should be in a trend on a daily time frame. For swing buying, we will need the forex pair to be bullish on a daily time frame. For selling, we will need the forex pair to be in a bearish trend on a daily time frame. Our condition number 2 is that we will buy or sell only after a pullback. In an uptrend, buying from the highs is very risky. The market should retrace from the high first. In a downtrend, selling from the lows is very risky. The market should pull back from the low first. Condition number 3, we will buy or sell only after a test of a liquidity zone. In an uptrend, the price should retrace to a liquidity demand zone. In a downtrend, the price should pull back to a liquidity supply zone. And the final condition, we will need a confirmed break-off structure BoS on a 4-hour time frame as our confirmation signal. For swing buying in an uptrend after a pullback and after a test of a liquidity demand zone, we will need a bullish break-off structure on a 4-hour time frame. That will be our final confirmation. Your best entry after a confirmed bullish break-off structure on a 4-hour time frame will be a retest of that broken structure. Set your stop loss below the lows on a 4-hour time frame, and your take profit will be based on a current higher high on a daily. And in the example, I will explain how the take profit can be extended. Learn Smart Money Concepts trading with my book. Get the essential basics and advanced secrets of SMC trading. For more info, check the link in the description below. The book is also available on Amazon. In a bearish trend, after a retracement to a liquidity supply zone, we will need confirmed bearish break-off structure on a 4-hour time frame. It will be a strong signal to sell. After a confirmed bearish break-off structure, set your sell limit order on a retest of a broken structure in a 4-hour time frame. That will be your perfect entry. Your stop loss should be above the last high on a 4-hour time frame. Set your stop loss above that, and your take profit will be at least the structure based on a current lower low. And of course, because the market is in a trend, take profit can be extended. I will explain to you later on how. Now let me show you an example so you could see how to use this model in practice. We are in Swiss yen forex pair on a daily time frame, and first we can see that the market is strongly bullish. We can see that the pair is trading in a strong uptrend. We can see that over time the market keeps updating higher highs and higher lows. So our first condition is met. Then if we zoom in the chart, we can see that just recently the market updated the high. We got a new higher high, higher close here. And then we saw a retracement and the market started to retrace. So the second condition is met. With this retracement, the market tested a significant liquidity demand zone. We can see a very important horizontal structure right here, and we also have a significant vertical structure, a trend line. So the market reached a very important demand zone based on this horizontal and vertical structures. So we can see that Swiss yen pair is bullish. On a daily, we see a confirmed retracement and a test of a significant liquidity demand zone. So the only condition that is missing is a break-off structure on a 4-hour time frame. On the 4-hour time frame, I executed market structure mapping, and we can see that after a retracement, after a bearish movement to our liquidity demand zone, the market started to coil and the price even started to set higher highs. But there we even see a minor bullish trend here, we don't see any valid bullish break-off structure. For a confirmed bullish break-off structure, we will need a breakout and a candle close above a previous high. From a current perspective, our current high is right here. Here's our current structure. And to confirm a bullish break of structure, we will need a 4-hour candle close above that. That will provide a confirmed bullish break of structure. After a 4-hour candle closes above that, we will set our buy limit order on a retest of that structure. We will aim at least at our current higher high. That will be the first target for our trade. So buying from here, we will set our stop loss below the lows on the 4-hour time frame, and we will aim at that high. But because the trend is bullish on a daily time frame, because the market is strongly bullish on a daily, there will be a high probability that the market will go higher, that the current high on a daily will be violated, and the market will update that and set a new higher close. Our next strong resistance on Swiss yen is right here, 205 psychological level, and we can assume that it might be the next goal for the buyers. So when our first target is reached, I suggest moving your stop loss to entry, making your position risk-free, closing half of your profits, and then holding the trade, expecting a further bullish continuation to the next strong resistance. That is how we swing trade forex with break of structure. Not every break of structure brings profits in swing trading. A break of structure accompanied by the simple conditions will help you to identify the ideal swing trading setup. Let me introduce in the comment section if you have any questions. Learn how to trade Smart Money Concepts SMC with my book. For more info, check the link in the description below. Also, please watch my other videos. I have a lot of videos about swing trading forex in this playlist.